Just on the Treasury projections yesterday that have come out that said they're looking at downgrading vote, have you got any initial estimates about how much that's going to cost government revenue?
No, I haven't seen any estimates in that regard. Bear in mind these were monthly economic indicators. Obviously, the Treasury prepare the half-yearly economic and fiscal update. That's the major revision of the accounts that we do during the year. Things come and go a little month to month, so it pays not to get too fixated on that.
At this stage, are you anticipating that when that data comes out, they will be actually downgrading their GDP forecast?
As I say, I don't know yet. I mean, clearly the view still is that over the forecast period we should be averaging around 3% growth. That's a solid result. It may be that in this year, or already was forecast to be a little under 3% this year. It may be that they revise that down a little, but I'm confident about our long-term plan for the transition of the economy.
And if they do revise that down a little bit, what happens to the government's tax take? And then from there, your plans on spending?
Well, there are a lot of different things that fuel how much revenue the government has, and that involves both the corporate tax take, PAYE, GST. We've obviously got to see the flow-on effects from things like the families package to those indicators, as well as the returns that we get from the various entities we own. So there's a lot of factors that contribute to how much revenue we've got. That's what the half-yearly update process is for, is to bring all of that together. So we won't have a specific indicator of that till that point.
And on Thursday, the Reserve Bank is set to announce reveal their latest GDP forecast as well. Are you expecting them to revise that down?
Oh, look, we'll wait and see what happens on Thursday, but clearly there's a lot of data out there that people are analysing. But I've still got real confidence in our ability to get that 3% growth over the forecast period. We are in a transition for this economy. Treasury's main point in this monthly set of indicators is the cooling of the housing market. That's absolutely true. That's part of transitioning away from relying on an overheated housing market to prop up the economy. When you're in that kind of transition, there may be some bumps along the road.
The family package has been in place for over a month now. Do you have any kind of idea of how much it's added to growth?
Yeah, it's an interesting point. There's sort of various views on that. I met with some bank economists last week who've seen different indicators within the spending tracks that they follow. I think that'll take a little time to settle down as people get used to having a bit more money in their bank accounts. Then they'll start to make some different spending decisions. Most of the forecasters expect that to be more seen in the third quarter of this year.
You're expecting to spend it or save it?
I think a lot of it will be spent because people have got important cost of living issues that they've got to meet, and certainly the anecdotal feedback that we've had has been from people who are using the money to buy nappies and make sure they've got good food on the table. That's exactly what it's for.